What is going on, Alpha Hunters? Hope everybody is having a very, what is it, tubular Tuesday? Man, it's some day. It is the second trading day of the week. So let's see what's going on. A very solid gap is what's going on. Actually, SPY, nice gap down here. Roughly gap down around 0.75% there. And we haven't moved too much intraday. You can see here on the SPY. I mean, for the most part, gap down, trade a little bit lower, but kind of bounce back. It's kind of mostly flat from where we kind of opened. A little bit of an upward move here over the past 3 hours, 4 hours. So, yeah, I mean, that's kind of the way the market's going today. And we'll see what the market's kind of reacting to. It's going to be the same thing it was reacting to kind of yesterday, or the thing that was starting to move quite substantially yesterday. And we'll get into that in just a bit. Take a look at Q's. Q's also a nice gap down. Currently down 1.1%. SPY down 0.8%. Yeah, Q's not too much indifferent. A little bit more of a basing here. But you definitely want to see it, as it's pushed higher, it's kind of flattened off. You want to see it push up. Tried to do that about 20 minutes ago. Then it came back down, so that's kind of an interesting look there. So you definitely want to see it, push up. If we start to break higher, I'd say over 440.40. Jesus. 440.40. Yeah, you're probably just going to be riding bullish there for a little bit. That'd be my take. IWM, nice gap down, man. This is a huge gap down, 2.25% currently. They gapped down 1.25% pretty much, and they have just kind of like steadily gave it back all day. Now, a lot of people will tell you that the IWM stocks, the Russell 2000 stocks, the small caps, they don't do well with high yield interest rate yields, and I have a little bit of a different take on that. To me, these are a lot of the companies that really can't afford to issue a lot of debt because the debt market to them is already expensive, right? They're unproven. They don't have great credit ratings, and while a lot of people think that they are not good in a high interest rate environment because they don't make money as much as the blue chip stocks, so you have to discount their future earnings, which a lot of them have none, and I get that, but they don't have debt, which is a massive deal as you talk about yields going higher, which we will talk about a little bit later. I still like the IWM. It might get hit, on the shorter term. I could definitely understand that. We'll take a look at some other stuff. The DIA, the Dow Jones Industrial Average. The Dow's also getting hit. It's not a good day. Gap down roughly 0.8%. Currently down 1.2%. Definitely at the lower ends of the day. Definitely not as much on the higher ends of the day like the SPY. SPY is kind of a little bit more towards the upper ends of the day. The DIA, not really. The RSP, nice gap down here. Roughly 0.5%. The RSP is currently down 1.1%. You see the nice little bearish kind of downward pressure that it's had throughout the day. And that's not too much indifferent from what we saw in the IWM, right? The IWM we saw, kind of rolling down. RSP, kind of rolling down as well. So this is kind of how the market looks there intraday. We didn't really have too much craziness kind of go on at the last hour of yesterday. But yeah, without a doubt, the RSP looking kind of bearish here. We're about to come into the 20 EMA. We're not too far from that. Last time we kind of came into that area, we definitely got support there and we bounced. We'll see if that happens again. We also have the previous all-time high just under us as well on the RSP. So yeah, RSP's got some, they got plenty of things, support levels kind of below it. I do like how it is. It is actually getting hit pretty good today, and so got the double top here on the DIA. Kind of talked about this yesterday. If we did wind up breaking down this little, I guess, neckline, and we obviously did that today. So yeah, uh, I mean it's not gonna. People are now going to be bearish off of this level. That's one thing I will say. So yeah, I mean we got the clear breakdown. So if we get the retest into this level, which that was also where we had previous highs as well. I mean, I would expect sellers to come in there, and if that happens kind of quickly, maybe tomorrow, then yeah, maybe we see some continued pressure tomorrow on the market. The IWM daily picture. Oof, man, I kind of thought we would be bullish on any kind of pullbacks that we would get early this week. I mean, this is a pretty substantial pullback. We have not broke the 50. We have not broke this level down here. Oh man, but we did break this little level. It's kind of a tough one right here, right now. I would definitely just put a little caution on, mostly because I don't see too much structure. Right, there's not much structure between where we currently are now and that 50 EMA, or even potentially to this low, and get the 50 EMA in between. But we definitely have a couple points a little bit lower. I would definitely want to see how maybe we interact, especially if you were buying the dip maybe this morning or yesterday on a pretty good pullback yesterday. You'd want to see maybe how we kind of set up here a little bit if we bounce off that 50. I think you're probably going to have stop losses below this low, though, because this is just a massive false breakout, and we just come smashing through. Yeah, we're going to see some bearishness. Qs. All right, Qs. Qs and SPY together both broke this little stop loss level that we kind of put in late last week, or moved up late last week. And, stop loss or alert level, whichever. So they both kind of gap below that on the open, right? SPY basically was like right on it, right on the open. Q's definitely gap below it. I could definitely understand saying, hey, you know what? It's been a good ride. That was one reason why we moved the stop loss up or the alert up. Yeah, I mean, you want to lock in profits, you want to lock in gains, especially when we've been on just such a monster run for 4 months. Like, it's not going to go on forever, man. You're going to have pullbacks, you're going to have issues, you're going to have other things that happen in the marketplace, you're going to have people take profit. Like, there's just so many other things that just kind of happen that end runs, and it's okay to take profits every now and then. SPY, though, SPY also broke that level. Now, I would be willing to be a little bit more on locking in the profit side, and I'll definitely show why here when we get to talk about yields. But here's the VIX. Look at that move up in VIX. Woo! Like, people, man, VIX. Look at that VIX spike. That's crazy. I mean, we're down a little bit on the market. We're down like 1%, but the VIX just crazy. Just jumps on any kind of bearish day. Not really even all that much of a spike, honestly. It hasn't gotten back up to 17, so we could definitely see the VIX continue to move higher, which means the market will probably continue to move lower. The DXY pulling back, resting a little bit today. Nothing crazy. We're not bearish and engulfing. We're not dropping all the way off. So this might take a couple days because we were at the end of a pretty good run here on the DXY over the past couple of weeks. Nice move higher yesterday, so maybe we'll take a couple days to maybe overturn this. Maybe we'll see a roll down, but if we just kind of consolidate here, moving averages come up here over the next couple days, I mean, DXY and the dollar might continue just to push higher, but for now it just looks like a resting day. So other than that, I would just say for right now I would just be waiting. Gold. There's not much to say. It's in a move. It's going bullish for now. Just let it keep running. There you go. Yields, man. Yields are up over 1% again today. About a half of an upper wick here coming in, but we are above the previous highs that we've had for the year. And I guess that's probably the more concerning part, especially when it comes to the stock market, because the one thing that I would say we've been talking about here, and a lot of people haven't been talking about, is what if yields go higher? Everybody that you'll talk to on TV or whatever, or you see on TV or social, like, nobody talks about yields going higher or interest rates going higher. They all will talk about, okay, maybe we'll, 6 months and then we'll start to get the cuts and then interest rates will go lower. But that's the Fed funds, right? That's the Fed funds. And guess what? The Fed doesn't control interest rates. No matter how much you think that they do not. And so if the bond market says that, hey, you need to pay us on our higher interest rate, and yields and interest rates start to go higher, and inflation is not driving yields higher, but it's the market driving it higher, that is a disaster scenario that we've kind of talked about, I think like last week or the week before. I think I even put a video out about that. That is a disaster scenario that I think that would be absolutely horrible for the market, because I mean, I don't think anybody alive has seen that scenario. Like, you're gonna have to go back a ways to see that in the market, and definitely data wasn't as prevalent back then, where yields were going higher and we weren't having inflation. So, or inflation wasn't going higher. So, anyways, that's not going to be a good scenario, because I mean, do we really think politicians are not going to spend money? Yeah, they're going to spend money. That's all they know how to do. They're like the worst wife. So, yields. It's going to look interesting today because we are right on top of these previous highs. So if yields kind of come back down, I will say it is a little bit of a false breakout. And, maybe we pull back a little bit and then push higher later on. Or maybe that's just the false breakout, and then maybe we're just going to drop off here. Yeah, I mean, both cases can happen. But if we wind up rallying end of day and yields close up towards the, above the yearly highs, the previous yearly highs, then yeah, I mean, we could see yields just continue to march higher here for the next couple days this week. I still think yields are probably going to be the biggest story of the year. Everybody wants to talk about AI, but I think yields are going to wind up being it. 10-2 inversion. So we actually looks like we are going to form this little inverted head and shoulders here. So you got that shoulder, neckline, head, neckline, shoulder. Looks like we're coming up. We haven't quite broken this neckline yet. So maybe another day or so. We'll see. Or it's just going to get in here and consolidate a little bit more. But it looks pretty good, which I couldn't imagine what would wind up happening tomorrow if that continued higher. Because yeah, the 2 years not even really pushing up. It's all the long term. It's all long term yields that are just pushing up today. So the 2 year just not doing much. And what would happen tomorrow if yields, especially the long term yields, started pushing higher? What's the 30-year doing? 30 years kind of sitting right on that yearly high, previous yearly high. So it's off today's highs. So yeah, it'll be interesting to see what yields do the rest of this week. If you made me pick, I say yields go higher the rest of this week. Or maybe not the rest of the week, but they'll go higher later this week. HYG, high yield corporate bonds. High yield corporate bonds. Well, they definitely had that massive breakdown yesterday. Just got a little bit of a continuation today. I would say it's not looking good. It's not looking good. LQD, yeah, also kind of not looking good. They LQD actually broke the yearly low. It hasn't held it. Nice bounce today off that low. And then the TLT. So this is a disaster one right here. Wow. So TLT kind of came in and connected in with that downtrending line. And then you can see just the rejection down. We broke the yearly low, possibly hold under it and close below it today. I mean, that wouldn't look good. I mean, and let's do this. Let's play a little where could yields be going? Let's do something like this. I mean, the TLT all the way down to like here in the next couple days down to 89. Ouch. I mean, that's gonna hurt. Yeah, that'll hurt. So let me go look at the 30-year. I'm gonna do that here as well. Grab it. Grab it. There we go. Let's say something like that. I mean, it looks okay. So, I mean, if we're moving up there, we'll say here over the next like 2 weeks or so. I mean, you're looking at for a move up to 4.7, and that kind of makes sense. Like if we get a move up to that level, right? I'm not gonna say that makes perfect sense, but if we make a move up to 4.7, which is would be maybe the upward part of this trend, and maybe we start to consolidate there. Well, the other part of it is 4.7. That's kind of where we had this neckline for this like head and shoulders type pattern before. We got this shoulder, neck, head, came down, bounced, got the shoulder there, and then we broke down, right? And that happened in Q4 of last year, and that would be right where that neckline is. So that would be the interesting part, is that's where the neckline is. So what would happen then with yields? Would yields then retest that neckline and then break down, and then we go back to being bullish on the market? Like that, it all would be an interesting proposition if that wound up happening here over the next week, 2 weeks, to make a move up to 4.7 on the 30-year yields. So that'd be a fun move, I'm sure, on the stock market. All right, take a look at sector rotation. Energy's doing very well again today. Utilities doing pretty good. Yep. We were seeing that rotation in the utilities late last week. And yeah, maybe that was a pretty good indication of why we're seeing some bearishness this week. Financials, communications, industrials, materials, staples, all outperforming there in the little group. Tech, real estate, underperforming. Discretionaries, healthcare, big time underperformers there. Okay. As far as intraday, how's it going? Utilities doing pretty good. Nice buying action on utilities for the first like hour and a half. Not too bad. Communications doing okay there. Energy's a little bit underperformance. Discretionaries. There we go. Okay, so discretionaries. There we go. Tech. Real estate, financials, industrials there. Okay. Healthcare, materials, and staples at the lower end. All right.